Hi, this is Matt Demetrician of Telemus Capital with the week in review for the week ending June 12th of 2020. The market succumbed to profit taking as they endured their worst week since March. All told, the S&P 500 fell 4.8%, with the Dow Jones Industrial Average falling more at 5.6%. The tech-heavy Nasdaq Composite declined only 2.3%, while small caps were sold off the most, with the Russell 2000 index declining 7.9%. Interestingly, the market started the week off hitting key milestones on Monday as the S&P 500 turned positive on the year on Monday's close, and the Nasdaq Composite rose above 10,000 for the first time. The bulk of the week's losses came on Thursday as the S&P 500 was down 5.9% on the day. While there was no explicit catalyst for the decline, a cautious June FOMC statement and an uptick in new coronavirus cases were blamed. The Fed didn't change its tune, but offered a bit more specific guidance. Ultimately, the market had just gone up too much, too fast, having rebounded 48% from its March 23rd low. All 11 sectors of the S&P 500 were down on the week. However, the dispersion in returns was sizable. As has been the case in down markets of late, technology stocks fared better, declining only 2%. More economically sensitive value stocks were hit the hardest, with the S&P 500 energy sector falling the most at 11.1%. The chart in the lower right corner shows the sector dispersion or sector returns for the S&P 500 during the week. At its policy meeting, the Fed kept interest rates unchanged, although FOMC members forecasted rates would remain where they are through 2022. Projections also called for a 6.5% decline in GDP for 2020. In fixed income markets, Treasuries ended the week with curve flattening gains. The 2-year yield declined by 3 basis points, while the 10-year yield fell by 20 basis points to finish out the week at a rate of 0.70%. The movement in interest rates priced in the lower for longer outlook from the Fed. The dollar appreciated 0.2% on the week. Oil bucked its upward trend and fell 8.3% and closed just above $36 a barrel. Gold finished the week 2.9% higher as investors sought out safe haven assets. Lastly, the CBOE Volatility Index, or VIX, spiked 47% last week. As we look ahead to the coming week, the market will look at added economic indicators, including the Empire State Manufacturing Survey and retail sales data. In addition, Fed Chair Powell will provide his semi-annual testimony to Congress. That concludes the week in review for the week ending June 12th of 2020. Thank you, stay safe, and enjoy your week.